I'm not going to stand here in front of one of the great wonders of the world and argue about an old movie. I'll go back inside. If you figure out some plan to make $800 last a lifetime, knock on the door. I'll be in there.
You're listening to the Keeping Your Money Show with Jamie Westenbarger and Bart Steinler.
All right, welcome back to Keeping Your Money Show. Jamie Westenbarger, joined as always by Bart Steinler. If you're just tuning in, we were just talking about wisely tax-efficient or wise tax-efficient strategies when withdrawing from your portfolio. Always something to consider. We'll talk a little bit more about taxes here in a little bit when we discuss RMDs as well. But I'd be remiss, Bart, if we did not wish everyone in the Jewish community a happy Hanukkah this week.
That's right. Tonight is the 7th night of the Festival of Lights. And for the friends and clients and listeners of the Jewish community, we'd like to wish you a very, very happy Hanukkah. I hope it's been a great one for you, and peace for the next year.
I saw something the other day. There's a couple temples in Grand Rapids, right?
Yeah,
I know there's the one downtown.
There's the Havas Israel, and then there's Temple Emmanuel.
Okay.
And then there is a...
what's the one that's like on Michigan?
Well, there's two on Michigan. There's the Havas Israel, and then there's the... I'm drawing a blank right now.
Sorry, I didn't mean to put you on the spot.
Yeah.
I just noticed that they had a menorah car the other day. It threw me off.
Yes. Yes.
He pulled out. I was driving down Michigan. He pulled out, and they have a giant menorah on the top of their car.
Right. It's the Orthodox group that's there in the smaller location on Michigan Avenue.
Yep. Exactly. All right. So I thought it was...
Chabad House. That's it.
There you go. All right. So I thought it was unique. I was like, well, I've never seen a car with a menorah on top of it. But there you go.
Yep. They also get into doing that, the Hanukkah lighting in the Calder Plaza, the giant menorah there. I think they're the ones that put that on.
All right. Well, fantastic. Well, happy Hanukkah to all of our Jewish listeners. Let's talk about RMDs. It's the end of the year. If you turn 70 and a half this year, I know it's not a real age, but that's the IRS's definition, 70 and a half. So, it's like Alice in Wonderland. You now have to keep track of your half birthdays.
I wonder how they came up with that. If it was like the House of Representatives came up with 69 and the Senate came up 71. With 71, and so they had their committees meet and compromise, and they said, "Oh, let's make it 70 and a half."
Yeah. What blows my mind about the whole thing is it's unnecessarily complicated, number one.
Yes.
And it's insanely punitive if you miss it. So there was a publication that came out in Kiplinger's about kind of, keeping an eye on this, and they had some tips, and I thought they were really good. The first one is you have to calculate the right amount. And we talked about the benefits of having a financial advisor in last segment, having a CPA. Mm-hmm. Well, here's another one. But I will tell you that the companies you have your money with should do the calculation for you as well. Mm-hmm. But make sure you're calculating this properly, because if you don't, the penalties are significant. You will pay 50% of what you should have withdrawn as a penalty for not withdrawing it. So think about that. If you have to take $10,000 this year as your required minimum distribution, and you fail to do so, the government will charge you a $5,000 penalty on that withdrawal. Plus, they will still charge you taxes on the $10,000 you were supposed to take out.
It's an IRS version of a small town speed trap, where the road coming into town is 55 miles an hour.
That's so true.
And you hit the city limits and it drops to 25, and there's a cruiser right there to pull you over.
That is a great analogy.
Yeah. Yep. The other thing is, if you have money in IRA accounts, and then you also have money in 401k accounts that you never rolled over, that you have to figure those separately. And you can't figure out, I have a total amount that I need for my required minimum distribution, and I'm going to take it all out of my 401k or all out of my IRA. So if it's in your IRA, you can group all your IRA accounts together, figure out what the amount is, and take it out of one IRA account. But if it's in your 401k, I believe each account has to be figured separately, and the deduction has to be taken out of each account. But you definitely cannot take the 401k required minimum distribution out of your IRA accounts or vice versa.
Right, exactly. The other thing is knowing when you don't have to take an RMD. So if you're over 70 and a half but you're still working, you don't have to take an RMD from your current company's 401k. Of course, unless you own more than 5% of the company, because, there always has to be an asterisk. But you still do have to take it from other IRA and 401k assets. So you're working somewhere, you're 72 years old, you have an old 401k from a previous job, and you have 2 IRAs. You still will have to take RMDs from the old 401k and from the 2 IRAs. You don't have to take it from the 401k you're contributing to currently.
I know several couples where there's a significant age difference between the two, the husband and the wife. The ones I know, the husbands are older and the wives are younger, but it could work either way. If your spouse is 10 years younger than you are, you actually need to use a different RMD calculator,
right?
Than if that isn't the case. And that's something that a lot of people may not even realize. And you may say, hey, here's an RMD calculator. I'm going to go and do this. But, if your wife is 10 years or younger than you are, then you can't use that RMD calculator. You have to use another one, and you could be penalized for not using the proper calendar.
Right.
Or calculator, I'm sorry.
You may want to automate your RMDs. Once turned 70 AF, makes the administrator kind of liable to just get that out to you. The one drawback of that I would say is you really should be choosing the investments to be using for this. For instance, right now we've had a very volatile market.
Mm-hmm.
If you have a chunk of money in the market, you could have experienced some significant losses. It's probably the last thing you want to do right now, to be forced to sell out of some of those assets to effectively create this required minimum distribution. So you might want to have a say in that, in help choosing how you're going to decide which assets to get out of that to fund it. With the new standard tax deduction, we do want to remember that RMDs can be taken out of IRAs and tax deducted. So some of you may be giving every year to a charity or your church or your temple or whatever, and in doing so, maybe you've written those off in the past, and now with the new standard deduction, maybe you're going to lose that. Could make sense to directly fund your charitable contributions from your RMDs, from your IRA. If you're over 70 and a half, you can give up to $100,000 from your IRA to charity tax-free. So there's an opportunity to still get basically a tax deduction for making those charitable contributions by doing it directly out of your IRA. Now, you have to do that a very specific way, so make sure you do it correctly in order to get the credit for that. You don't want to wait till the last minute either, Bart. I mean,
no.
I think a lot of people, I'm going to call the day after Christmas. It takes time for companies, depending on how you're invested, they may have to sell positions in your portfolio, and you're better off doing it earlier in the month of December than later.
Right. Now, you also want to be careful, because some people will say, well, I'm going to take my, RMD after the 31st, and then the next year I'm taking, the first time you take it, and then the next year you have to take it by the 31st. So then you would get 2 RMDs in one calendar year, and that could bump you up into a higher tax bracket, which would cause you expenses in other areas.
Yep, absolutely. So, all right, so just good things to think about. If you need any opinions on that, or maybe you want to talk to somebody about the best way to handle your RMDs, by all means, you can always give us a call. 888-98-MONEY is the number, or send me an email, info at keepingyourmoney.com. All right, coming up, we're going to let you in on something in the 401k world. It could be affecting the type of advice you get on your 401k, and not because an advisor's not trying to help you, but because their hands may be tied, right here on the Keeping Your Money Show.
The ups and downs of a roller coaster are fun for some people, but maybe too nerve-wracking for others. The same is true for the ups and downs of the stock market. If your palms sweat when the market fluctuates, it may be time to reevaluate your investment choices. The ride to your financial future shouldn't keep you awake at night. Call the Keeping Your Money Show at 1-888-98-MONEY to get off the roller coaster and onto solid ground.